doubling its capacity to 12 million tons per annum in 3 years. JSW Cement isn't taking its foot off the gas. The company aims to further ramp up capacity to 20 million tons per annum by the end of 2020, following which it will go in for an IPO. CNBC TV 18's Kevin Lee caught up with the company's managing director, Parth Jindal, to talk about the expansion plans over the next several years.
So JSW Cement has expanded from 6 million tons to 12.6 million tons over the last 3 years. And in April, we would be going to 14 million tons with our additional capacity coming up in Jajpur in Orissa. So with that, we will become a 14 million ton company. My target is that by FY21, this company would become a 20 million ton company. And we have plans on adding greenfield capacities as well as brownfield capacities in southwest as well as in the east to take us to 20 million. Post that, we would look at tapping into the public markets, going in for an IPO, and then expanding from there. Also, over the last few years, the company has been strategically acquiring limestone mines. So we've acquired limestone mines in Chhattisgarh, we've acquired limestone mines in Rajasthan through the auction, we've acquired limestone mines in Gujarat. So with that, the company has ample room to go from 20 million to 30 million tons post the IPO. So that's where we are at today.
You mentioned that you'll get to 14 million tons by April, that's the end of this financial year. Before your IPO, you want to be at 20 million tons. How much of this will be done through the organic route? As you mentioned, you're expanding both greenfield and brownfield. Are you also looking for acquisitions, and do you have a set target of where greenfield and brownfield will get you at, so we know the gap between 20 million tons and that?
No, so I'm looking at this 100% through the organic route. So, JSW Steel is also aggressively expanding both in Dolvi as well as in Vijayanagar. With that, we will have ample opportunity because the slag generation will increase. So, we are looking at expanding our Dolvi facility from 2.2 million to 4 million tons. We're looking at expanding our Vijayanagar facility from 3.2 million tons to 5 million tons. And then we're looking at expanding our Salboni unit from 2.4 million to 3.6 million tons. And our Jajpur unit from 1.2 million to 2.4 million tons. Plus, apart from that, we are planning on adding a small grinding unit, a 0.6 million ton grinding unit in Salem in Tamil Nadu. With this, we have a very clear roadmap of hitting 20.6 million tons or roughly 20 million tons through the organic route. And then post the IPO, that's when we would have a war chest available to look at inorganic opportunities as well as look at the attractive projects in Chhattisgarh and Rajasthan.
So you don't foresee any big acquisitions coming through before your IPO happens?
No, I think we acquired Shiva Cement last year, and with that acquisition, we are currently developing the mines at Shiva. And once we have developed the mines and we've got it to a scale where we can put in a new capacity there, then we would be putting up a clinkerizing unit at Shiva. This facility would service the requirements of our Jajpur grinding unit as well as our Salboni grinding unit. So I think that was a very strategic acquisition for us. And now we're very focused on execution. So we're not really looking at acquisition opportunities. But obviously, if something does come up, we will evaluate it.
Before that war chest comes in with your IPO, how are you planning on funding this expansion, and what is your current debt at?
So our current debt is at roughly 2,400 crores. And we are doing quite well this financial year. So looking at the market dynamics and looking at our volume growth, we're very confident of achieving significant growth come next year. So just to give you some context, this year we're growing at roughly 54% year on year compared to the industry average growth of between 15 to 20% in the
volume growth. Right?
Volume growth. In terms of EBITDA, we've also seen significant growths this year, and I can't really disclose the numbers, but we're roughly up 25 to 30% from last year. So we are adding volume, we're adding in EBITDA. So I'm quite hopeful that we will be able to generate significant internal accruals, and then based on those internal accruals, I don't see any problem in raising the financing through the banking sector.
And what's your outlook on pricing, because that's remained fairly soft? You are in the south, you're in the west and the east, yes. So I'm guessing it's slightly different per market, but your general outlook on pricing this year?
So I think there's been a lot of jostling for market share. I think a lot of the big players have been at it against each other, trying to gain market share. And I think a lot of the pricing softening that we witnessed in Q2 and Q3 of this financial year, we saw because of this competition and fight for market share. Having said that, I think the largest player in our sector is Ultratech, and I think Ultratech's numbers have been released and capacity utilizations have gone up. I think they've been able to ramp up the JP facilities. So I think with their capacity utilization numbers going up, and even Ambuja and ACC announced their results, even their capacity utilization numbers have gone up. So I think with the capacity utilization of the large players hovering at above 80%, I think pricing discipline should return to the cement industry.
Okay, so that's the word coming in on the expansion at JSW Cement. Let's move on and shift focus now. This is an exclusive. Speaking from the sidelines of the NASSCOM India Leadership Forum, my colleague Mugdha Warrior spoke with Paul Polman, former CEO of Unilever, to get his sense of what went into the making of the HCL GSK deal a reality.
It was the idea of the current management, Sanjeev Mehta, who is very capably running our HCL business here as CEO and chairman, had actually the idea to buy them. It cost me a little bit of money, I agree with that, but I also have so much confidence in our people in HCL that have consistently delivered and over-delivered that without any doubt they will make this brand also more successful than its previous owners, and that's obviously the idea, and it fits very well with our food business. You have the Brew brand, which is very well established. You have the Kisan brand, which is a very successful brand.
HCL's, I think, revenue contribution is still below 10% globally for Unilever. Do you see that? Of HCL, yes.
Yeah, because the world is big, obviously, but there is no reason. With the current growth rates, we've more than doubled our business in my tenure here as well, and there's no reason why we cannot continue on that trajectory. The Indian economy is helping. It's one of the best performing economies in the world, so that's a good thing. There's still many people that need to be lifted out of poverty, which is what we tend to focus on. That's a very good thing. If the rural areas, which is still 70% of India, get a little bit more prosperous, companies like ours will benefit from that. And we've had a consistent, strong performance that you've also seen in the share price of HCL, which has been one of the best performing shares in the Indian stock market. So most people tend to agree with what we are doing. So I would say don't be too eager, stay on the trajectory and the numbers will ultimately get there.
So you see FMCG, demand growing in India, and there were some rural shops announced by the government in the budget. So do you see that, helping the FMCG sector?
Yeah, I actually saw that this morning, and obviously, undoubtedly more will be announced with the elections coming up. So, but that will all help. The more we lift people out of poverty and put infrastructure there and help the farmers with improving their income, that will directly benefit companies like ours who deal with the bottom of the pyramid. No question about it.
All right, and ahead of Tech Mahindra's board meeting tomorrow, Kritika Saxena caught up with the company's CEO CP Gurnani to get a sense of the capital allocation policy that the company might look at discussing for the coming year.
The whole purpose of the board meeting is to get a ratification of the capital allocation policy. And obviously, it's a mix of what the company needs in reserves, what the company requires for M&A, what the company would like to return to the shareholder. To me, a buyback or a dividend is really returning to the shareholder. So that is exactly what the board is going to decide tomorrow.
Okay, I completely understand the board meeting is tomorrow, so I won't ask you to get into specifics. But just to help our viewers understand, CP, is it going to be a combination of a buyback and a dividend? What's the broad plan in terms of what stands right now for shareholders? I mean,
we've written a letter to SEBI and told them this board meeting is to consider the buyback. So I don't think there's anything else on the agenda. But yes, there will be extensive discussions beyond buyback with the board on capital allocation as a policy.
Okay, fair enough. How much of capital would you want to invest for the buyback here, CP? I get, again, I'm not getting into specifics, but 10%, 25%, what's the...
Anyway, Kritika...
All options are on board.
I can only tell you is the board meeting is tomorrow at 9. I'll be back here pretty soon. immediately after the board meeting. It is everything happening in Bombay, and I promise you I'll let you know what the board decides.
And that's going to happen tomorrow. We will, of course, keep tracking all the developments.